Thanks for joining me today. I haven't done a webinar for a while, and since the market is such a disaster, I thought maybe this would be a good time to do one. And I pointed out on the Skype board the other day that there was a sale on Frank Bunn's materials. Now I want to try something before we get too far along here. There's a new feature, a poll, and I'm going to launch it and see if this works. Okay. Can you... Hey, it works. Okay, that's 100% answered. We had 65 sign up, but I don't think we're going to get nearly that many, but that's fine. Okay. I'm going to end that poll, so it looks like about, well, 2/3 of you have not heard of his methods, so I'm going to be teaching you about some of what he teaches anyway. Oh, we still have people coming in. I'll leave this poll up for a little bit longer. Okay, I'm going to end this one. And I don't need to share the results on that. Well, let's do this one. Are you an Insider Club member? Okay, I have to launch it. Well, several of you aren't. That's good. You can join. Okay, let's do the last one. Do you use HGSI? Okay. So there are 7 that don't. That's good. You can subscribe. Anyway, I just want to try that out and get some feedback, and that's good to know. Now, anyway, Frank Bunn is an educator, trader. He's been around for quite a while, and let me bring up this. I put a notice out that his course was on sale for $12.99 yesterday, and now it's back up to $84.99. But if you check on Udemy, it seems like these courses go on sale about every other day. And this is the one that I'm referring to right now. Mastering Price Charts, How to Trade. I've got all the courses, of course, and I've been through every one of them. And I think he's an excellent instructor with who isn't trying to sell something or teach something that really doesn't work. He's an anti-indicator guy. He doesn't believe in spending a bunch of money on indicators which don't work in his opinion, and I have a tendency to agree with him because they're all based upon price and volume. He's more of a well, you'll see. I'm not going to try to describe it. I'll just show you what I know. Anyway, Udemy, and search for Frank Bunn. If after you go through this today you're interested in taking this course, Mastering Price Charts, How to Trade, and wait for it to go on sale because it will go back on at $12.99. Now I see Robert Minkowski's on. He bought it and he is excited about it, or he was. I assume you still are, Robert. But I want to go ahead and talk about many of these things, and this is what is on the PDF. Okay, so I marked a spot in my video to come back to this, and and we'll go through this. Now, one thing I want to do is I want to well, we can leave it up here for now. I'll just use the cues as an example and minimize this. He talks about a lot about order flow and price mechanics, and what he does is look for low risk entry points, and he does this a couple of ways. He does it with pivots, confirm pivots, and he does it with price action trend changes, and I'm going to try to point these out as we go along. Now, first thing he talks about in this course is structure and direction. Now, structure is what a candle is doing today. So the structure, what's the structure on this candle right here where my mouse is? The structure is that it is going from negative to positive, and the direction is up. So multiple bars can really change the structure of the market. Like back here at this point, it was a low point, and you could maybe consider this a pivot. Let me try something here. But it would not be a confirmed pivot until it is over the high of the prior day right there. So here's your low pivot. There's a up day and then a follow through, and it has to take out this prior day. Or, well, no, that's correct, because this would be coming off the pivot, and to clear that, it has to get beyond that. Now, a price action trend change would be one positive bar, a second positive bar, and you're looking for the third higher high. So if I get a line in here, so here's the first higher high because it's higher than the prior day. Here's the second higher high, and as soon as it breaks that second higher high, that would be a price trend change, and you can see what happened. It went up. Now let's reverse this. Here is a new lower low. Here is a new lower low. And as soon as it broke that, that would be considered the third lower low. Now it did bounce back up again, but notice it didn't take out this high right here. So this trend, which began down, continued down, and it's been down all the way. As we go down here, I do not see a sequence of three higher highs at all. So, well, maybe down here. No, this would be the first higher high right here, and this would be the second higher high. So it didn't get to the third higher high, and what have we done? We've continued to go down. So these are price action trend changes that I'm describing right now. Now, as I go through charts today, I'm going to be looking for these things. So structure, what's the structure? I started on structure and kind of got sidetracked. The structure of the market here becomes bullish when it hits the third higher high, and the direction of each candle was up. So if you look at the first part of your PDF file, and I'm just going to leave this up here so I can refer to it. Structure refers to the high and low prices of each interval. Each interval in this instance is the candle. Direction is the relationship of the closing price to the opening price. Structural higher highs and higher lows as well as closes. So you can have, what he means by that is you can have, oh, I don't see a good example of it here. You can have a higher, you can have 2 days here that are high, and then you could have a third day. Let me draw in here. say a third day, which is high up here, but it closes down, this would still be considered a higher high, even though the direction of the bar is down. So that's what he means by that. Well, this right here, I just explained that right here. I'm sorry, I got on the wrong sentence. So I've explained what the structure is and the direction with the price action trend changes. His other method of looking for trades is pivots and confirm pivots. Sometimes he'll take a trade where it doesn't surpass the prior day's high, and he calls that a cheater. But his main objective is looking for low-risk trades. He does not chase trades. And you can do this on a daily chart, weekly chart, 5-minute chart. It really doesn't matter. And the discipline is to look for these patterns or to look for pivots. And now, as I go through charts, let's start looking for some pivots. I think I covered all this right here. If I didn't, no, I think I did. So what he's looking for, or what we all should be looking for, is the state of the market at any time and the state of a stock. A stock either goes through a contraction, expansion, and the contraction can be up or down, and this is what the expansion properties are. If you have contraction during an uptrend, it doesn't change the primary trend. Now I want to point out that in my add-on today, I had put a new folder in here for this webinar, and it's in my charting views. It's contextual, intrinsic, setup risk charts. And the reason I did this is I wanted to be able to look at a naked chart like this with VPA, and I also want to use this chart, which is my primary chart for analysis, because it shows me the money flow based upon relationship to moving averages. Now let me go into a stock. I'm going to change, and I just want to I'll go into all securities, and then I'll just go down here to my daily scans and go to 1A, and you can see that even though the market is being beaten up today, that there are a lot of stocks that are up. And let's just take a look at some of these stocks. I'm not familiar with any of the stocks. Well, I'm not familiar with that, and I don't want to be. Let's look at this one. This is a familiar name. And everything I look at is going to be down, or most things are going to be down. Yes, they're bouncing today, but let's go back to this order flow and market sentiment. I would like to find an uptrending chart. I don't know. Well, here. This is the best way to do it. I'm going to move over here and see the EMA fan column right here up. I'm going to sort on that and then go back up to the top, and now these have an EMA up fan. So let's see how they look. Not a good chart. And you may be asking why this is an up fan, because the 200s here, the 100s here, the 50s here, and the 18 is here. It has not broken down through the 50 yet, so it's still considered an uptrend, but that isn't what I want to use. I don't know if I'll be able to find anything, to tell you the truth. Wow. Let's do this. I'm jumping around here. I hope you don't mind. I'm going to go into the designer and I'm going to rebuild my user smart groups. Yeah, I guess I could have used the SQQQ chart. Tom, thank you. Didn't think about it. Now, for those of you who are not HGSI users, there is something in here called user smart groups where you can build your own smart groups based upon filters. And I've got a bunch of them in here. It takes this computer about 30 seconds to rebuild all of them. It's just about done. It takes 30 seconds when I'm not talking, that is. I got a lot going on with this computer right now. It's going to take closer to a minute, it looks like. Okay, so I'm going into my user groups. Under my smart groups, I'm going to go to the instant watch list, intraday bullish, and let's take a look at these. These are stocks that should be in an uptrend. Well, this one was today. You can see there was a gap down. Hudson Tech, this is a stock that I'm actually in, and it's struggling right now. Let's see what Merck looks like. Well, we can use Merck. And I'll make it full screen so we can talk about it and point out what has happened here. Now this, I'm going to make this yellow. When this dropped down here, this would be a low pivot, and when this high was taken out from the prior day, that could be considered a low pivot. The problem is that this stock, Merck, was in a downtrend at the time. So even though it's a low risk entry, because your stop would be below this pivot low right here, you don't know if this is going to continue to go up or if it's going to run into resistance at these moving averages. Now, you can see that this low pivot worked out great, and it really didn't look back. And what do we have here? I'm going to change this to a line. We have a series of higher low pivots as this moves up. And you can see down here that this histogram, and by the way, I use histograms rather than MACD like Frank Bunn does, because I think it gives me a better view of different time frames. In other words, this is the 3 versus the 6. This is what he calls the micro trend. This is a short-term trend, the 6 and the 18, and this is the 18 and the 50. This is short-term trend, intermediate-term trend. So with these histograms, I can see where there is some slackening of buying power. It stalls up here, and you can see it very clearly here. Why is this? Because these moving averages are coming together. It's lost momentum, and then it comes down. What happens? The 3 crosses below the 6, and then as the 3 crosses above the 6 again, it goes up. Now this didn't last very long, but if you believe in support and resistance, you can see that this ran into resistance right here. Anyway, getting back to this was a low pivot, and then we had a series of higher pivots. Of course, you're going to have hiccups, you're going to have adverse price movement, and one thing that he says you have to learn to fall in love with is adverse price movement. When a stock that's moving in your direction moves against you. I know we all have a tendency to panic when that happens, and if we have a profit, we don't want to lose money, but we'll never really make big money if we panic at every little pullback. So you have to decide what is too much. And his rule is that you can have two adverse price movements, and when it goes into the third adverse price movement, that is a potential change of trend. So what do we have here? Did we have any 2 days that were adverse price movements? It doesn't look like it, does it? Then we got up here, and that's an adverse price movement. That's an adverse price movement, but then it turned right around again. So I couldn't consider this as a change of trend. Now, when we get down here, we had a day down and another one that was down, but it bounced back up, and guess where the support was? Right here at the 18-period exponential moving averages. So oftentimes when these stocks do pull back, they will find support at one of these moving averages. Now this is considered a fan because these are spread apart nicely, 200, 100, 50, and the 18. What does a fan mean? It means that there is usually, especially on these larger cap stocks, usually good institutional support. So looking at this chart, you can see when the 3 crossed the 6 right here, it held steady until we got here on this pullback, but there was a reversal off of the 18. It pulled back again the next day, didn't, and then dropped down. It certainly didn't break that tweezer bottom to the downside. I'm the first one to admit it's really hard to hold anything through this, and if a 3 crosses below the 6 like this, it's probably best to just get out and look for another setup. So what happened here? Well, here's your low pivot. When it surpassed this high on this day, that is a low risk entry. And what do we have here? Do we have a series of higher low pivots for the most part? Yeah, so this stock is still trending up after this pullback. Does that make sense? You have to really just study this, take your emotion out of it, which I know is hard to do. So this is my chart. This is my primary chart because it gives me a lot of information. I want to just go over this very, very quickly here. And I have the 3, the 6, 18, 50, 100, 200 pocket pivots. These are Morales and Casher, but I use them a little bit different. So true pocket pivot would be, down here it's pulled back and then there's buying volume. I just use volume pocket pivots in addition to that, so they'll fire even though when they're not in a pocket. It's based upon volume being greater than the previous 5 or 10 days down volume. It's just a nice visual to see where there is buying support coming in on a stock that's already moving. And so here's a pullback, but at the same time, I know that looking at the short-term trend, the 6 and the 18, it wasn't enough of a pullback to be a serious pullback. And then you look at the 18 and 15, and it didn't get anywhere close to pulling back. So it's just some profit taking, and then it provides an opportunity for a low risk entry. Now these are the volume point of control bars here. When it's green, of course, the bear or the bulls are in control, and when you have the magenta or rose, I should say, it means the bears have control for a very short time. This is a short-term indicator based upon 10 days. And then up here in the top window, I put this in here so I can see what the group is doing. You can see that the group is large pharma. Group rank is 89. There are 11 securities in this. So there's a ton of information on this chart, and that's why I like it. Let me show you some other charts that I put in here, and then we'll get back to the PDF file. Darn it. Okay, I just have a daily chart, a naked chart that I pointed out before. I have a weekly chart, and this one is drawing in the support and resistance lines automatically. I have my undercut and rally chart, which really works quite well to help find potential early entries for a pivot. There are scans for this. You can see here that there was on Merck right here. On the pullback, this light green bar indicates when there was either a VPA flag or a bullish candle or a combination of both right here. So this was the first day after the negative pullback that I'm seeing some accumulation. That was followed up right here. And then what happened here? This is a low pivot also. And you can see that it took out this high, and that was a confirmed pivot at that time. Let's go clear back here and look at this. Here, this is a sell-off. You can see it was negative, but there was a white candle there which showed accumulation. The 3 crossed the 6 the following day on the green bar, and it didn't look back. So this chart works well, and I have several scans for this looking for the undercut and rally. I have a couple of negative scans also looking for breakdowns. I need to do some more work on that though, but anyway, we had been in such a long bull market that I kind of neglected the bear side, but I will certainly get to work on that. Okay, let me show you a couple more charts. This is a position sizing chart that I put in for us. I've had it, but all the information I need is right here, which goes along with my spreadsheet. Let me bring the spreadsheet up quickly. I have 3 spreadsheets that Insider Club members can use, or HGSI members. I don't care as long as you use the software. But these are available in my newsletter. I'm jumping around here, but I just want to show you this while I'm thinking about it. If you go to the member services, okay, and go to the newsletter, this is what the newsletter looks like from last week. I've got these position sizing spreadsheet links in here. 0.5% risk, 1% risk, 2% risk, and a 0.5% risk either long or short. I know a lot of you use this spreadsheet, and it's what it is a risk-based spreadsheet. So you can take information, and I'm just going to use Merck right here to show you what this is all about. And what I do is I highlight that and copy it and paste it. And this was just updated the other day, by the way. MRK. And if I'm looking at, this is yesterday's information down here, and here's the intraday information today. So yesterday, the low was 87.42. I'll put that in first. And what was the high yesterday? 90.81. So just by putting these two numbers in, and if I have 100,000 capital in there, it says I can buy 146 shares to risk 1 unit. And you can see over here that I put the 146 in here rather than 146.16, and my risk is $499 or $500 on this trade. And then the target says it goes up if I hit 1R, 2R, 3R, 4R. This would be the profit. Now, it's pretty hard to do this in this market environment, that's for sure. But I want to show you a tool that we have in here and set up the scenario. Well, I put the high and the low price in, and that would be the breakout point right there. I want to use this tool though, and it's the R tool. If you put it at the low right here, what you're risking, it tells you what you're risking, 3.76%. And if you look over here at the spreadsheet, 3.77%. So I'm off just a little bit here. But if I have this in place, and then I go down to the next chart, 5A, it's going to show me if I achieve these levels, or where I have to go to get my reward up to R1, R2, R3, R4, which corresponds with these numbers over here. So I put that in, and I put one in for the short side too, which would come down this way. Just kind of a fun thing to have. By the way, if this updates though, I would turn off automatic updating when you're position sizing, because, let me hit this and see if it does it. I hit F5 and updated that, and it disappeared. So when you're position sizing, if you're using HGSI and Thinkorswim, go to intraday options and select manual updates, and I'll just leave it on manual right now for the rest of this session. That way it won't disappear. Once again, this tool is here. It has to be on the white line, and then you click the R tool. Might want to blow this up as much as possible. And then this is what it's showing here. If I go down to number 5A, it shows me the R levels, or the reward levels, if this stock continues to go. Okay, any questions about that? I don't want to spend any more time on the spreadsheet. It's pretty self-explanatory. One thing, it has a fixed number for the low, or if you like the ATR, the 10-day average true range, that information is right in here. $2.06. And the high is already in there. I need yesterday's close, which was 89.19. And by using the ATR, it says I can only buy 134 shares rather than 146 shares. So this is based upon the average true range. It takes volatility into account more than this one does. This is just fixed below the pivot. Now this over here, probing stock shares, if you wanted to probe, if you didn't want to do everything at first, 29 in the first, 29 in the second, 29 in the third, and 58 on the fourth when you go in for 40% rather than 20%. Pretty handy spreadsheet, and it takes no time to fill it out. Okay, let me get back to where I was. So in this very tough market. By the way, it looks like, let me bring the Qs back up here. It traded down to here. Now we're getting a little bit buying in here. But on this chart, there is no way that we should be taking longs, because based upon this chart right here, we did get one day where the 3 did cross the 6. And I'll put a crosshair on here. But if we are in such a strong downtrend like this, more than likely it's going to go up and it's going to bump against one of these moving averages, and it's a short 3-day counter trend, and it's going to go right back down. Of course, you don't know that because this looked like it was going to be the beginning of a rally. We had stopping volume, and there was a confirmation of that, and then we had a big white candle. But if we use that theory of 3 higher highs, okay, here would be the first higher high, here would be the second higher high, and then it failed before that. Yes, I mean, it is confusing because it looks like it's going to go up here, and then the next day, a lot of people got caught on this. I can't remember the statistics, but there were hundreds of millions of dollars lost on this day because the 3 bullish candles enticed bottom fishers to jump into the market, and they jumped into the leveraged Qs, and they just got hammered. I can't remember how many hundreds of millions of dollars were lost just on this trade, because it, looking at this overnight and first thing in the morning, they jumped in, and then what happened? They got hammered. So you have to really use your own judgment, obviously, but when you have these tools, moving averages, and rules to keep you on the right side of the market, you just have to use some, I don't know, better judgment. I know I was very tempted to get in here, but I didn't, fortunately. Using this right here, contraction during expansion. Oh no, I'm sorry. I don't want to talk about contraction. What I did just refer to is the expansion here did not change the primary trend. That's what I was just showing you. That's what I meant to say. So even though there was expansion here, what's the primary trend? The primary trend is on this day, short-term trend did flip to up, as you can see, but the long-term trend and the medium-term trend stayed down. But this chart, once again, it puts things in perspective because it shows you where you are relative to the moving averages. Also, yeah, there was a blip up here, but these trends, the short term, the 6 and the 18, and the 18 and the 50 did not budge. Okay, going over this a little bit more, higher highs and higher lows during expansion, lower lows and lower closes during contraction. So expansion, higher highs and higher lows, we all know that. And then contraction, there will be lower lows and lower closes. And this was contraction, and then it broke down here. Yeah, for context, the 3 pulling against away from the 6 shows It's kind of hard to see in here. You can see it, but that's where these histograms come in handy. You can see the 3s pulling away from the 6, but unfortunately it reversed. The primary trend was still down here, and what happened? It got up here against the 200, or right around the 200, and then it failed again. Trends have a tendency to persist. Robert, are you talking right here, pivot trend change? Yeah, you're right. It was a pivot trend change, sorry. But it really wasn't confirmed till right here, was it? I mean, if you take this whole range in, but it did meet the qualifications. But also, the next day, if you were planning to get in and you saw that it was gapping down from here to here, you'd be a little reluctant to start putting on positions. And what are you fighting against here? You're fighting against the moving averages going down. And it's clearly visible down here on these histograms. Now, like I said, Frank Bunn likes to use MACD. I personally don't use MACD. It can give you, I think, divergences that are not meaningful. I don't believe a lot in divergences either. But, that's just my personal opinion. So, stacked pivot points, I already talked about that. Contraction properties, price action reversals, I've kind of talked about this too. Converging pivot points, unfavorable closes, that's what we're seeing here. Let's just go to this daily chart. Unfavorable closes, mostly unfavorable closes, and there was never a price change to the upside. Here's that pivot Robert was referring to, but it was a false pivot. And if I put this crosshair on here, you can see that we got right up against resistance here on 3 bars also. All right, let's move on. I'm going over these things pretty quickly. The reason I broke all this down for myself and for you is that this is a great reference if you do take the Frank Bunn course, because he covers a lot of material in that course. And what I did is I went through as I went along, and I did this a few years ago actually, and I outlined everything that he was talking about so I would have a reference, and now you have it. Okay, let's talk a little bit about the price level system. This was a little bit confusing to me at first, but it makes more sense to me now. I'm going to move this up a little bit. I'm going to take a drink, excuse me. Okay, what's a price level system? Let me bring my tool back up here. What he looks for on a price level system, and I'm just going to use the line. I'll hold my shift key. I want to make this yellow. And I'll do it again up here. If you hold your shift key when you're drawing these lines, it keeps the line straight. So what he looks for are price levels. And if he puts it on a high, and then he puts it on the next high, and then as a new high is reached, he just moves these up if he's in a position, and then it helps him stay in that position. Now when I move up to here to this new high, Pretend that you don't see this candle yet. So this is very bullish, and he stays in the position. But the next day, there is this red candle. It's a doji, and it's inside these two bars. Now this is on this previous high, and this is on this previous high. And what he calls this is in play. It's in play because it hasn't surpassed this high yet. So if it breaks down, he will get out for the, not always, but generally it depends on the penetration and so on. But this gives him a visual of what's in play. Now, when this was surpassed on this high, that established a new high. So this is the in play area here now. And then it went up and established a new high. And this is a very narrow in play here. But if we use the daily candle and see where it closed, it would still be in play here. Now, this works intraday on very short-term charts, and he uses it a lot for intraday trading. If you go through his videos, you'll see that on his screencasts. He uses this to keep, I assume, to keep his attention focused on what's going on, and it gives him a place to determine when the trend has changed on him. So that high was established, and then you move this one up to this tab, to this, and then where's the in play area? Well, I assume, and he really didn't talk about this, or I missed it, I assume he is putting them just below the in play area or the prior day's low. If you put it right below the in play area, that's awfully tight. So, you know, it depends on how much you want to give up, Robert, but I would say the prior day's low would give you breathing room. But when you get an extended trend like this, you know, he may just move it up to this right here, and the stop would have been there. And then he probably wouldn't have felt good about it, but if he, and I'm not saying he took this trade, because he probably didn't. But let's put another line in here. And I'm going to put this line right here. So if he were using this trailing line right here, or the low of this, for his stop, he would not have been stopped out here. But on the other hand, as this broke down, there would have been a gap below this. So, you know, I really can't answer that question. It's, you know, it's just a matter of feel and how much money you want to give up. But I like this concept. The more I've learned about it and really spent time studying on it, and it's just a reverse to the downside. So here, okay, I'm going to use this as my first lower low. And then this would be the low here. Let's get rid of this one to avoid confusion. I think I can delete this one. I can. Okay, so here's a lower low. And then this one becomes the low here. So that's just a small in play area. And then as this goes down, I'm using this one because that was the next day. This becomes, since this was not taken out to the upside, this area here is the in play area. And then he's hoping, because the trend is down, that it continues down. Yes, you have a couple of bullish candles here. One, that's kind of bullish. Here's another one, but it didn't get up here and it didn't fill this gap. So the in play area is here, and then it breaks down right here, So what do? You move this down here, and this would be this is a low, and then it moves down again. But I like the visual aspect of it, that it focuses your attention on your levels, where you are. And yes, there are some sharp green candles here, but if we were using this in play, if I did this correctly, this low here, well, actually, I would have moved clear down to here, wouldn't I? Okay. And not looking over here. So here would have been low. Here's another low right here, established here. Then this is your in-play area. Now your stop would have been at this low right here, this red bar. But what happened? It continued down. You don't know, but it just gives something to focus on. Now there's a video in there where he talks about in play, and if you go in and you talk or listen to his videos, especially the screen, the live, they were live at the time, screen representations, or the movement, then he talks about pivots, and he talks about these price levels. It's just another nice tool to keep you on the side of the trend. Any questions about that? It may not have been the greatest explanation, but no, it's Pat. It's the low and the high. Let me bring that back. Well, let me do it right here. So what he does is he uses the high. That's not quite on the high, and he uses the high for the upside. So each new high that's established, he just moves this bar up, and then this is your in-play area. Yeah, the wick's included. Yes, because it's the high or low of the day. It just shows the buying or selling pressure for that day. Yeah, give it a try. Pat, do you have his course or not? Did you take my advice and spend $12.95? Oh, thank you. Have you been through it? Did you just get it? Have you been through it yet? He explains this. Okay, good. He explains this stuff a lot better than I do. Of course, he's been doing it for 20 years too. And really, these are the only methods he uses. He doesn't mess with indicators. Okay, bullish test of, well, this is all about the price level. If it tests a high and, well, I didn't have a good example of this. Just, go through the course and you'll see what I'm talking about. 1, 2, 3 reversal patterns are, let's see, 1, 2, 3. That might be considered a 1, 2, 3 reversal pattern. Oh, I'm sorry, Gary, you didn't get the, let me get it for you. I'll send it out with the video. Okay, there are 3 types of risk. I want to talk about that. I've already talked about context, but let's talk about context a little bit more. There are the 3 trends. No, I'm sorry. Not 3 trends. I'm showing 3 trends here. Contextual trends, micro, short, intermediate, and long-term EMAs. The long-term EMAs are the 200, the 100, and the 50, which really shows you, what the institutions are doing and the funds and so on. In a long-term strong uptrend, when the fan is in place, every dip is bought. We have just the opposite situation right now, unfortunately, and it continues to be that way. But context is looking at the price and in relationship to the moving averages, and also looking at support and resistance. And support and resistance, you can see, works pretty well. Here was the low here, here was the low here, and then it took off from there. Now, let's go back here. Here's some resistance right here. It got up here and it fell. Now, so the moving averages are what puts things into context, because you can immediately see what an index or a chart is doing by throwing this, an index or a stock is doing by throwing this chart on it. I mean, they may look good, and let me just do an update here. I just did an F5. If it's on manual, all you have to do is an F5 and it'll update the warehouse view that you're working on. So you don't have to have it running all the time in the background. Okay, it's still updating. So on a intraday, 1 day today, well, here's one that's up 49% today. But I can tell, without even looking at the chart, that before today, the 13 was down, or the 3 was down through the 6, happened 5 days ago, and the volume point of control happened 5 days ago also. Now let's see what's going on with this chart today. Okay, what is this? Squarespace. You can see the group has been brutalized, and this has gone down. We have a huge pocket pivot today. The 3 is crossing the 6. This could be considered, even though there's no wick on it, this could be considered a low pivot, because it's the lowest point, and here was the prior day. So it could have been bought there or bought there. This is a low-risk trade, but let's put it into context. What is the context of this? The context is that the trend is down sharply. Here's the 200, here's the 100, here's the 50, the 18, and the 3 and the 6. So if you bought this, it's bottom fishing. Now, something had to drive this up, or is this one of those meme stocks? I don't know. One thing I like to do is I use the alternate N key, and that brings up news, and it just happens to be set on bar chart right now. You can see their technical opinion is strong sell, but I'm going to go over here and look for news. No new news on it today. On here anywhere. Anyway, but you can go to, let's just go to FinViz and see if there's any news on it. Downgrade. Oh, strong earnings, May 12th. So this is what happened. It wasn't in a bar chart yet, but FinViz has it because they're linked to Barron's. So now we know. So this is a confirmed pivot because it took out this high right here. You'd still be really reluctant to take it. wouldn't you? But as it continued to go up through the day, it made a massive gain. Still, putting it in context, it's in a downtrend. But with that kind of buying, look at that. It certainly might be worth putting in a watch list and see if it moves up. Now over here, these numbers, I want to point this out. These are the relationship of the price to the moving average, but it's based upon last night's close. So this bar does not figure into the calculations. This will all be changed, of course, when you do your nightly update. What does change is all of this information up here. This is current. So what happened today? Volume's very high, spreads wide, close is very high, sentiment's bullish, strength seen returning after a downtrend. That is this yellow VPA flag, and high volume adds to strength, effort to rise. Very, very bullish candle. Now I want to point out something that over here, if you look at the left, Frank Bunn doesn't mention volume often. And I don't know why he doesn't use volume, because volume gives us a much better picture of the force behind a move. Sure, you can tell on the candle, but isn't it nicer? Effort to rise is a very strong day which closes near the high. Just a second, Larry, I'll point something out to you. So effort to rise is just a very strong day. But using volume in the formula and visually makes a lot more sense to me, because, you know, we have VPA, and I've studied VPA for a long time, and it just, the combination of the two works well. Over here I say uses MACD to track momentum. Volume's an integral part of VPA, and I say we can combine Frank Bunn's techniques with VPA for greater insight. And this tells me a lot more than just the pivot. So the pivot, confirmation on strong volume is good. Put this in your watch list and see if this can follow through. It's probably going to go in the direction of the market, but maybe not. Now anyway, Larry, over here, these are all links explaining. If you go to the HGSI cheat sheet, bring it up, it tells you right here, here's an effort up. Tells you what it is. So I've linked all these PDFs for you. And here is the shape guide. If you want more detail, you go to the shape guide. And if you do a Control F, that opens up a window here. And just type in effort. And there's 3 of them. Here's effort to fall, comes up first. Just keep going down until you find it. Effort to rise right here. And then there's a little better explanation of it. I wrote this stuff years ago, and it's just for people who are new to VPA to come. But it's all linked here on that PDF file for you. Okay? Okay, where were we? Okay, so contextual risk. What's the contextual risk on this one? Well, it's been down, as you can see. But that is such a strong candle that this one has a fighting chance to reverse course. Here's your low risk entry, but it's gone so far this is no longer a low risk entry. Wrong field here. You would have to use a different stop point here. Okay, I want to bring this up. And let's use the R tool. Off of this low, and I don't want yellow. I want red. which PDF, Naren? The one that I'm referring to over here? Right there. And then those other ones are linked at the bottom. Okay? So just let me get this crosshair off of here and delete this. So if you use the low for your stop, which you're not going to do, just putting this tool on here, you'd be risking 33%. Obviously, you're not going to do that. If you're interested in this stock and you want a more reasonable stopping point, you can just use this tool to get to a place where you would want to limit your risk. Let's say you're willing to risk 10% on this stock, and you put a buy price just slightly over this tomorrow, and you're risking 10%. These are the numbers you could put into the spreadsheet that I showed you, 1943 and 2159, and it will tell you how many shares you can buy to maintain that 10% risk. Okay, this is a very handy tool, by the way. But like I said, remember, if you're using it and it's updating in the background, it's going to, when it refreshes, it wipes that out. So that's why I suggest going to a manual update when you're doing that. Okay, anyway, let's look at a few more charts. I want to extend this a little bit. Do you have any questions about what I've covered? I kind of did a cursory job, but I didn't want to read all this stuff, and most of it is very self-explanatory. And if you go through the course, you can just use these my notes here to refer to different sections. Here's another Lordstown Motor Ride. Another big one. Let's go to more info from the web. Let's go to FinViz here. Wow, that's a $2 stock. Why did it jump? Motley Fool has something. It was thrown a lifeline. It was on the verge of bankruptcy. Probably still a good stock to stay away from. Now, okay, we see that. Let's put it in context. What's the context? Trend is down. Huge volume though. And if this is considered a low pivot, here would be your pivot buy point. But, you know, this is a very risky stock, obviously. But just by switching to this view, you can immediately put it into the context. Well, he should be able to just click on that link, Naren, and it should load for you. But if not, do what Pat says. Just copy it and paste it, and it'll come down. So I really use, excuse me, I need a drink. I really refer to this stock almost immediately because I get so much information out of it. Here's another effort to rise and strength seen returning, but I also realized that it was throwing a lifeline, but is that going to make any difference in the long term? You're fighting a downtrend here. More than likely it's going to go up here and it's going to stall. Let's do another one here. I'd like to find something that I recognize. Wow, another big move up. If you look down here at the bottom, I don't have a, well, we can go to this one. If you go to the position sizing chart, you can see the information on the day. Look at the volume here. 450% above normal, 400%. Here's where the intraday change and the range and so on. So John, you want me to look for stocks that have crossed the 3 and the 6? Okay. And oh, you want me to try CF? Sorry. Okay. Well, this is good. Well, this is good. I don't like the lack of volume on this today, but it did close at 88.87% of its daily range. And let's go to the put it in perspective or context. Well, the group did turn up today. The 3 did cross. It's very close. It looks like it did cross by the end of the day. It's kind of hard to tell. But let's look at it this way. All right, so this could be a price. This could be, just a second here. I'm going to draw a line on here. This could be considered a low pivot here, or this could be here, and then yesterday it surpassed here and then it fell back. But this is also could be a price trend change, because here's a higher high, here's a higher high, and today's a higher high. Plus, the 3 and the 6 are right on top of each other, so it didn't show that it closed above it, but it's right there. But this would be, here's the 100, it got down close to the 100, it would be a price trend change. But you have to remember, and Frank Bunn emphasizes this, every trade you take could have a random outcome. These are just guidelines. Just because it had these three highs and as a price, let me go back up here. Well, I can't with this on. Go back up here to the price action trend change, the third consecutive or non-consecutive high. They don't have to be right next to each other. Changes the price action trend from down to up. So here's a high, here's a high, here's a high. This would qualify as a price action trend change. And I know you like to have the 3 and the 6 above each other. Now, this was rejected here. It could go, but just remember, you need to have a stop in place. And what do you want to risk on a trade like this? This is where we go down to the position sizing and bring up the tool, annotation tool. I know you and we always have issues with stops. I mean, you don't want to go clear down here. 9.23%. That's too much, because to get to your first R is clear up at $108. And you don't want to risk, darn it, I didn't want to do that. So on a day like today, Today's low might be a good place to put a stop. And what are you risking? 6% on the trade. Are you comfortable risking 6%? You want to look at the ATR on this? Robert? Okay, let's do the ATR. You want to do the spreadsheet? Is that what you're saying? Okay, this is the way I do it. I just go in here and copy this. Control C. Control V. Copies all the formulas down for us, and then I'll resize it so we can see the information. Let's make this smaller. And since we're doing it, let's make sure I have the closing price. I'll do an F5 on it. And let's just use today's range, okay? So what do we have here? First of all, I'll type the symbol in. CF. And what's the high today? The intraday high is 99.13. And the intraday low is 93.29. And the risk is 5.95 over here, but if we go to the 10-day ATR, I have to use yesterday's ATR, Robert, which is fine, it's a 10-day. So 5876. And what's the high is already over here. Yesterday's close, or we can use today's close since the market is closed. 98.48. So what does that give us? On this one over here, we can buy 84 shares with, if you're risking 500 bucks. This one here, you can buy 75 shares. But John works with these kind of numbers. So you can buy 423 shares. Sure, Ralph. Thanks for watching. Or over here, you can now buy what? 379 with the ATR. Robert, you use the ATR mostly, don't you? Yeah. Okay. Well, they both work great. And this one positions your size at fewer shares, and it includes volatility. So, whatever. Now, you know, Bunn always uses a low pivot, but that's fine. It's whatever works for you. But you can see how well these, this spreadsheet works in conjunction with this chart because all the information's right in here. What 2 decimal points? Scott? Yeah, in the spreadsheet? Oh, you mean these? Oh. Well, I don't want to go in and reformat everything. You're going to have to live with it. Someday I may do that for you. I have never thought of that. I just put the formulas in and let it run. But now that you've told me, I'll probably feel guilty if I don't do it, right? Okay, so any questions? I'm running a little bit long here, but that's all right. In summary, I really like his methodology because I think it helps keep us keep us disciplined, or keep me disciplined, because it makes me look at context and risk and different price levels. There are different ways to determine if you have a pivot trend or if you have a price action trend. Okay. All right. I'm sorry. Let me give you want me to post it here, Paul? Is that what you wanted? Oh, that's to Gary Banks. I'm sorry. I was going directly to Gary Banks. Everyone in meeting. I'm sorry. I put it in the wrong spot. I sent it directly to somebody. So this is what I referred to today, and the links are all on here for the VPA information. But as you go, if you take the course, and I suggest you do, but wait for it to go on sale if you didn't buy it, as you go through the course, you can just refer to these notes, and I think it'll be helpful for you.